Hello traders, what's going on? In this video, I'll be teaching you how to spot trading opportunities like a professional in forex markets. I will show you people how we spotted this trading opportunity that we are about to make 3-to-1 risk reward. And I will also show you how to make use of proper use of market sessions, right? Like we have London session, New York session, and other sections in the market. At the end of this video, you will learn how to do all these things like professional trader. Now, looking at this EURJPY we have here, we can see that the market has been creating series of higher highs and higher lows, which means the market is in uptrend. And whenever market is in uptrend, you look only for buy opportunities because trading against the trend is very, very risky in the market. Now, since we have in mind that we are looking for buy position, so what do? We expect for some things to happen in the market. Now, if you have been following me for some time, you will discover that I've always said this: whenever market is moving to the upside and market creates higher high, right? Now go exactly or even though maybe slightly below the previous resistance turn to support, market makers, the institutions, the big boys in the market knows that so many people open their markets here to push it to the upside, then market will go up a little, right? Next thing you are going to see, market will come down to take out that liquidity or that low before continuation to the upside. Now, I want you to always keep this in mind in your trading analysis. Now, let's look at what happened here. As you can see, the markets on lower time frame, which we are not going to visit, markets created this higher high here, right? Now created this higher low, created a higher high, going above this. Now remember, this low did not take out any low. What happened? Market came, taking out the low before continuation to the upside. Let me just identify this so that you understand better what we are talking about. Now let's give this a break of structure and also take this out of our what liquidity, because it always happens, right? Okay, let's quickly go to 15 minutes to see better, to have better picture of what we are talking about. Now, as you can see, look at it there. Created this high, had this low. Now created a little high. Do you see it? Now giving us this low, and after market created this high that broke above this, then what happened? Market came down here, sweeping on the low position with this wick before continuation to the upside. So we should be out expecting that the same thing to happen here, which had already what started happening. So after the market broke this structure to the upside, created this, we are waiting for it to sweep this after going to this place. This happened on Friday. We are waiting for the market to sweep this low before any other thing. So today, we are waiting for it to happen either during London session or New York session. Always wait for liquidity to be swept before they start or immediately a session is started. Once it happens, boom, you attack the markets. Now, when this happened, we now move down to lower time frame. Always have in mind, whenever your liquidity is swept, go down to lower time frame to see or to wait for change of trend. So let's really quickly go to 15 minutes. Okay, now on 15 minutes, we can see that, or let's go to 5 minutes. Yes. Now, on 5 minutes, after the market must have taken out our liquidity. Now, we are now waiting for this market to change in trend. Now, as you can see, we have a market that was creating series of lower lows and lower highs to now creating what? Higher highs and higher lows, right? After we saw this, we took our trade, putting our stop loss here, waiting for this powerful what 3-to-1 risk reward in this market on Monday morning. Now, whenever liquidity is swept, what do? You go to lower time frame and wait for change of trend. Now, I want you to watch closely what happened at this particular place. Now, remember what I said just few minutes ago. Whenever a high is created, a low is created without it sweeping any liquidity. After the next high comes, that liquidity will be taken out, right? Market knows that so many people must have opened at this particular place, putting their stop loss below here. So what will happen? They will take it out before continuation to the upside. So I want you to always keep this in mind before making any trading decision. Always go to down, always go down to lower time frame to check for change of trend whenever liquidity is swept. With this thing, with these keys, you will always be ahead of the market. You will analyze fine, take positions, and with good risk reward. Remember, good risk reward determines how long you will be in the market. Now we are risking only just 1% of our capital to get 3%, right? So, and this is the right way to trade. So feel free, comment, subscribe, like, and share so that whenever we drop any trading opportunity, insight, or setup, you will be the first to be notified. Have a wonderful day, traders.